This was another great question. Is BlackRock worth adding to our equity portfolio? Will their value significantly increase once their Bitcoin ETF is approved? Interesting. So let's dig into the numbers as we do. So first of all, BlackRock valuation, it is currently overvalued by about 13.8%. So not a big opportunity there. Let's look at earnings growth, because we are in the habit of looking at earnings growth. You can see it's kind of small, runs around 8%, 6 to 8%, depending on the season. So it's not a disruptive stock. BlackRock 1-year target from a combination of about 26 different analysts is $807. That's a 9% upside from where we are today. So again, I don't get out of bed for 6%. Probably not 9% either. I wouldn't invest there. And the big question, though, was really going back to if they do get the Bitcoin ETF and if they are approved first, how much of a boon could it be for the business? Well, let's look at the analog, which is the iShares Gold Trust, which is the BlackRock ETF, BlackRock own iShares. So their expense ratio, the amount of money they get for assets under management, is 0.4%. Total asset under management of IAU is $229.7 billion. This means that iShares collects about $919.8 million in fees per year from this ETF. Now, assuming expenses are 50% of the fees, profit is $459.9 million per year, and that is 8.6% of the total profit of BlackRock. So not that big at all. And remember, there are an army of like 10,000 salespeople that sell this stuff to other people. So there are that 50% expenses. I could be wrong on the 50% expense. It could be 75%. It could be 40%, but it's somewhere kind of in that range. And if they do get Bitcoin, they're not going to be turning it into a, $230 billion asset under management overnight. That'll take time to get there. Now let's look at return on capital employed. And now I look at this because it's a measure of how efficiently it is using its capital to generate profits. And it's generated by dividing a company's net profit by its capital employed. So many people call it ROCE. It means that a company is generating a lot of profit from its capital. For example, that's Tesla on the right. They generate 20.1% last year on their capital, whereas BlackRock only generate 5.4%. So would I invest? Again, no. We're looking at a lot of this type of stuff I look at to determine if I would invest. So that's the answer to that. But we have another question that's related to BlackRock as to how much you would pump the Bitcoin price. We'll get to that in a second.